Okay, welcome back to the YouTube channel. Today I got an interesting story for you. So I've been reading a lot lately how millennials, as a finance channels on this channel, will talk about everything finance related and what I would do. I bought rental properties, have a pretty good stock portfolio, super nice house. Could probably buy any car that I've wanted to drive. Besides like $1 million Bugatti, I can't do that. But any other car that's sitting at a dealership, I could probably drive. So I'm reading a lot, and there's something super interesting that just popped up. It just said that millennials now have $127,000 worth of net worth. And I made some research, and this seems to be the going number. So I looked a little bit into it, and I looked into those numbers, and it was really interesting to see what the numbers actually came out to be. So let's go over the numbers and see what millennials are spending on. Let's see here. Millennials spend a lot on food, dinners out, trying to get ahead with retirement, and have families and expensive car payments. So I was just looking at making some research, doing some due diligence about their net worth, because frankly in this video I'm going to tell about why this is absolute garbage. So this video is dedicated to that, and I don't think that most millennials have $125,000 as a net worth, and I'm going to show you why. So 3 years ago, 2019, about 4 years ago, according to this article, what fits way more is that millennials had a net worth of $8,000. So they had a net worth of $8,000. Now you are going to tell me that in 4 years, millennials took that net worth, didn't buy no fancy cars during COVID that are now underwater $80,000 or $40,000 on a new Kia Telluride, and didn't buy a nice car with way too much over asking price. You're telling me that millennials don't like to live bougie and pay $12 for a little avocado toast. And let me ask you this: how did millennials? I personally love to know how millennials grew, how they saved their finances from $8,000 to $125,000. Now I know that in some scenarios that might be right if you got stock options and whatnot. But we're talking about the average here. We're talking about every other millennial you know. So if you're in a group of 5 millennials, they're all worth $128,000. So what is that coming from? Where did these people come from with that high of a net worth? It's not like I don't want them to have that. I'm more than happy for all these people that have a high net worth. But what I don't understand is that we're doing so bad economy-wise. We're having trouble paying bills. We're having car repos going through the roof. We have dealerships that can't sell cars. We have people that are $30,000-$40,000 underwater on their car loans. We have people that can't afford housing that are living paycheck to paycheck. All these companies let people go, and now they're talking about how millennials have $127,000 as a net worth. That is crazy. That is absolutely crazy. So what is true? You tell me in the comments below if you think the article for $127,000 is true, or do you think that the $8,000 to probably now it's about $32,000 one is true? Because some articles were saying that it's $57,000 to $400,000. So they gave them a spectrum. And I like that spectrum better because that would fit most millennials in between 50 and 400,000. But right now, as it looks right now, we're like on a cliff going downwards. So people are going to deplete their savings. People are going to have to live off of unemployment, have to tighten their bellies, have to tighten everything about how to spend money because you just can't afford it. So what would I do? So what would I do in this case? Well, I'm a millennial for sure, and I would actually get ahead with the career or start your own business and try to do that and actually do that. And that is the way that I think it should go. But I see a lot of millennials that are bartenders, that are workers at Safeway, that are just lower income wise. So another theory that I had was that if you're kind of on the lower theory, on the lower income section, that you got your wealth inherited. So it doesn't say in that article that the wealth was inherited from their parents, because I could see that if their parents died, that there's a huge wealth transfer, and that you are going to get $120,000 in net worth because of the wealth transfer and your parents' house. Millennials' parents own houses, so they get some of it. I get that. I can actually see that would be the case, but the article didn't state where the money was from, what they did with it, or how they got to get those numbers. So how they made the research and found out how they did those numbers. So do you really think that millennials have a net worth of $120,000? Because I sure think it's bogus. I think the average millennial probably has 30, 40, 50 to 100, not even 100, to like $80,000, the average. And that means that there's some very, very high income earners that make $500,000 a year and have $10, $15 million in real estate and $50 million in stocks, inherited or did well. But most of them, I don't think so, because we were like the lost generation that's just, trying to get ahead and can't catch a break with COVID, starting off the workforce in 2008, and then having COVID happening, having kids and all that can really cost you a lot in financial freedom. And I do get it if you do not have kids. I'm one of those people. You can have your finances are pretty easier, and you can basically spend your money on whatever you want. And kids cost a lot of money. So you can live better when you don't have kids, but kids can be a huge joy, so I do get that. But then circling back to the original topic with the millennials, it's just crazy how they're having $125,000 net worth, and how many of those people own houses. So when I look at some other statistics, it said like every other millennial now owns a house or a condo. So owning a house or a condo is only an asset if they've put enough money down. So that's not a flex that people can actually bring up. Says, oh, millennials, 50% of you guys own houses. Well, that's nice, but if your house isn't if you got a house that's worth $500,000 and you have a loan for $500,000, so if your loan is for $500,000 and your house is worth $500,000, you're actually in the negative, because if you want to sell that house today at today's interest rate and you bought it 2 years ago for $500, it's most likely not going to sell for $500, or maybe you're in a hot market but we're taking averages, because even if you could find a seller for $520 or something, there's realtor costs. There's costs to sell the property, and then the new buyers gonna nitpick your house, because they can buy, they would whoever brings the money to the table basically makes the deal happen. So the buyer now of that house is going to tell you to fix the water heater, to replace this, to do this, they're asking you to close on the property, so to pay for closing costs, that's what I meant. So all of a sudden you're getting beat up while you bought a house over asking price, because there were 4 offers on it and everybody was $10,000, $20,000, $30,000 over asking price, and you had to put in a huge bid over that, and now you can't get rid of it. That is not something to be proud of. And I know there's a bunch of people like that, because we were in before we bought here, we were looking at it, and they were just in the Bay Area, and there were like offers in before they even accepted offers, and it was just nuts. And now when you look at the Bay Area Zillow listings, you can pick and you can nitpick as much as you want, because you're bringing the money. So now you can't take that into consideration, that they have 50% homeowners, so to speak, because anybody can be a homeowner. You just need to bring a little money to the table, and with an FHA loan, 3.5%, and you can buy whatever you want as long as you have good enough income and you can show that you held a job steady and have enough money to bring to the table and left over. So that's not a badge of honor to say, hey, I own a house, because you're better off renting if you don't have enough money to put substantially down and keep the house up. If you're going to take an FHA loan out and you do not have the money to fix it all up and to keep it running, then what good does a homeowner do for you? Yeah, you got some appreciation, 3 to 4%, but you tell me in the comments why you would do that. And secondly, before I end this video, is how do people calculate that? Because it goes so into it. My stock portfolio fluctuates, my housing value fluctuates on a daily basis. So how did they even come up with numbers like that? Because just tax returns and just say, oh, this guy has a house here, 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 and they just take it from tax returns, because everybody cheats on their tax returns. So then the number would be way higher, because nobody goes to the IRS and says, I made $300,000 a year while they only made 30 or 100. That just doesn't really make sense. Only if you try to do shady stuff and try to make your taxes look way more to get loans and qualify for other stuff. But besides that, for a normal human who doesn't try to do stuff like that, don't think that is a very, very smart option to do. So let me know what you think about this one, and I'll see you in the next one. Thanks for walking with me, and I'll see you in the next one.